Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Thursday, September the 18th. I'm starting off with Blinkx, where there have been moves for the stock to try and recover since the middle of August, really with the recovery of the 20-day moving average, the higher low towards 30 as compared to July. And then since then, break of the 50-day moving average and support coming in towards the 10-day line at 38 pence. Currently, that's the initial stop loss zone, maybe risk down to the 20-day moving average at 37 pence, just to have a bit more leeway there. But the main issue here is whether we can break back above the floor of the July gap to the downside at 45. That was retested as expected just last week, and at least above the 20-day line, we'll be looking for a retest of 45 pence and maybe a little bit more. As far as Blinkx shares are concerned. But the big buy signal here really would be a weekly close back above 45 pence so that the shares can start trying to close the massive gap down that we had in July. Obviously, the upside then would be towards 60 pence. Another situation which has been causing us some technical issues is Mariana Resources, where the floor should have come in, I suppose, in August towards the 1.8 pence zone, but we failed just above 2 pence, and there was a possible selling climax gap to the downside for last week. The gap's been closed now towards 2 pence, but the big buy signal here would be a weekly close back above yesterday's high. We do have bullish divergence in the RSI window, which gives us the hint that the shares could actually deliver a lasting reversal here within this falling wedge formation, which is a bullish situation. Above 2 pence takes us back to July resistance at 3.5 pence plus. Finishing off with soda oil, where there's been the wind down from the 1.19 pence peak that we had earlier in the week. There is good news in the sense that the rebound for Wednesday's session came in above the bottom of the gap to the upside that we had earlier this month of 0.7 pence, and that really is the end of day close stop loss on the buy argument. Above 0.7 on the floor of the gap, we could return to the 1.2 pence area. So we've got to set up here, especially given the way that yesterday's price action was a 10-day moving average rebound. That's it from me. More updates at spreadbetmagazine.com.